day at the chart, a sea of red, talking puts and calls, but they just stare ahead. Strike price means nothing in the black minds, margins and leverage like mountains to climb. Spent the whole week on Delta and Greece.
Your list of things. You see up to your up, down a little bit right there. You see that checkbox that says turn on beta weighting or beta weighting? Yep. So then you're going to beta weight this against the SPY. So you're going to type in there SPY. And now we should be able to see. Yeah, okay. So now your deltas are not just delta. They're weighted against the SPY, which means, so basically what this is doing is it's giving us the equivalent of all of our positions as if they were one standard size. And for the standard size, we're going to use the SPY index, which is a 600. And if you go to your charts and type in SPY, it is a $650 product. So it's about 65 grand worth. So now when our delta, so this means now if we have 33 overall long delta, if you go back to your monitoring of positions and you see at the bottom there, now it tells you over in your delta column where it says 30 delta column where it says 33.97. So that's basically giving you a guesstimation that you have currently directionally 34 long SPY shares. But does that make sense or no?
A little bit, yeah.
Look at this delta on your AMD. Open up AMD. All right. So you see how there's three different options there. One of them is plus 18 or plus 3 delta. Or I'm looking at the wrong thing. One of them is 9.9 delta. Sorry. 9.92. The other one's negative 18.39. And the other is 15.43. So those two that are working together, right? Those two strikes that are working together, they basically account for 3 short delta. So the difference between those two is basically negative 3, pretty close to it. You see what I'm talking about?
Yeah, you say.
Yeah. See, the difference between them is about negative 3. And then you have about 10 long delta. So that means overall that position is where you're getting to this 7 delta. But this is beta weighted to basically the share equivalent of the SPY. So because if you take the beta weighting off, go back up and untoggle the beta weighting, now it's going to give you a different number. Now it's saying that you're basically 11.5 shares of AMD long, but when you beta weight it against the SPY, it reduces all that. So look down at the bottom. If you just use your pure delta, it says you're 600, you have 615 delta. But that 615 doesn't really give you context because you might have 500 of that in a really small price stock. You might have, so for example, look at this Angel Studios position. This is 306 of this 600 delta, even though this is one of the cheapest price products that we're working with. But when you beta weight it, go back and beta weight it again, and that gives a little context as to the actual dollar size. You see how now it goes down to 3 long delta. Even though if you're using raw delta, it was half of your deltas in your portfolio. When you beta weight it, because you don't actually have that much capital in this position, it gives you a better picture of the size of capital and directional risk that you're using in that particular trade. Does that make sense?
Mm-hmm.
You sure?
Yeah.
Okay. All right. So now that we have that done, this market is about to open in 12 minutes, and then your Russell position right here. We have the Russell moved. Open up the chart for the Russell. So go to your charts and type in /RTY. / before it. All right. We're looking at /RTY. I'm looking at it too. Take your chart and look out further in time. You're looking at the daily chart? Up in the, so over on the top right. You see how there's a bunch of different things where, no, see where it says D up there? D? Go to the weekly. 3-year weekly. All right. And then go to your settings for your chart. Yeah. All right. Now on here, we're going to fix your chart so it's not so freaking crazy all the time. We want to get rid of some of this crap. So first things first, go to options. What do you have checked in there? Highlight extended. Undo the one that says highlight extended hours trading, and then go to equities. Undo show corporate actions. Undo the highlight extended hours trading sessions. Okay, go to appearance. I think we're going to leave most of that the same, except for your background. Change that to black. Right now it's like a gray color. Is that where it says background there? Is that black? There you go. That's better. Now change you see where it says that first check mark down by that gray for a grid. Yeah, uncheck that. Much cleaner looking. All right, that'll work for now. Was there anything else we want to add to that? What else do you have on there? Those are just quarterly expirations. Those are fine. All right, yeah, you can leave that like it is. All right. So what happened on Friday? I was camping, so I wasn't able to adjust your position for you. But what does it look like the market did? You can zoom in a little bit if you want. Oops.
It went down.
It definitely went down. It went down a lot. It was a big day. Go back to that daily chart, or go to. Click on your screen. Is that mine? Go to like the 180 days or the 6-month 4-hour chart. 180 days, 4 hours. So this gives it a little bit more context of what we've been doing over the near term, and it gives it a little bit more context about not only for the week were we down, but just the size of the move. That shows it in 2 4-hour bars right there. So pretty big move. Typically, when you get that large of a move, especially if we look at the daily chart, go to like the 5-minute chart. Typically, when we get this big of a move, you can see what happened. If you hover so like you'll get a timestamp there. See down below at the very, very bottom, you see where it says, what's that? We have to do one more thing to fix your chart here. Go back to your settings, and you need to get some frames on your expansion area on your price axis. So go to price axis, see what that says. Expansion area, put 20 in there where it says expansion area. Yep, go ahead and hit apply. Okay, and then now go to your time axis. Expansion area, put 100 in there. 100. Hit apply. There you go. That'll make it a little easier for you to see what's going on and on the price itself. But you see how right there, market closes at 4 o'clock, right? And right as the market closed, this thing then continued to sell off after the market closed. You see? Did you find 5 o'clock?
Oh, it's military time.
Hmm?
Is that the time right down here?
Yeah, the time's down there. Or 4 o'clock. Sorry, not 4 o'clock. So it should be 16:00.
Right there.
Oh, I was pretty sure that the market continued to sell off after the market closed. What was I looking at? I thought it sold off like another. Pretty sure it did. You go
There's all
to.
that.
Yeah, I thought that last little extension was after the market closed. Maybe I could be wrong. But either way, it closed into real weakness. So, meaning usually when you have that strong of a move, you can expect some type of continuation over the next coming days. This was 100% news driven, on top of the fact that we're really overpriced. We got really strong confirmation with the VIX. Look at the VIX.
What's that?
Go to the chart up top and type in VIX, VIX. Did you say what is the VIX? VIX is this measures the uncertainty of the S&Ps. So based off the options prices in the SPY, this is a gauge of people refer to it as like a fear gauge. So the more people are willing to pay for options because they're concerned that they need usually protective puts to the downside to protect their investments, they pay more for them because they're concerned. So as they pay more for them because they're concerned, the VIX continues to go up because this tool is just a measurement of. Can you be off your phone and pretend like you're paying attention?
I am. I was trying to turn off the AC. It's cold.
This is a tool to give you the measurement of fear in the market. And it does that based off the options prices of the SPY. So when the SPY goes down, the VIX usually goes up. When everything is hunky-dory and options are relatively cheap, this thing usually trends down. So go ahead and zoom the chart out to a longer time frame. Just like the yearly, or there you go. So you see here, see that big spike there? Yeah, that huge spike. That means the market has had some serious fear. We've had a lot of these ranges where we currently are. Like we've been kind of this whole year, except for that one time, or actually for the last few years, we've been kind of in this range where we're currently seeing it right now. But this is definitely the upper, where we are right now, is definitely the upper edge of that range before it breaks out to something that is significantly scarier. So that just gives you a little bit of context about what the VIX doing. But the VIX being up like this into this down move would tell a lot of different people that it's likely that we're going to have a continuation. So what that means is for this position, when the market opens in 3 minutes, so go back to your positions tab, then go to your futures position in the Russell. What we're going to do is we're going to put on an adjustment. So first of all, since the market is opening in less than 3 minutes, usually you'll have some prices that are coming through. So if we go to trade, then we go to RTY, we go to /RTY. Yep. Then go to the one that we have an active position on, expand that. We're not going to get actual prices in the option chain, but up top here, go all the way up to up top. You see over on to the left of where you're at, up a little bit more, right to the right, down, stop. You see those green and numbers right there and red numbers?
Mm-hmm.
You see how where we closed was 23.84, but now the bid and the ask is at 24.10. Mm-hmm. So that means we're going to gap up in a few minutes. Not a ton, but we're going to gap up in 2 minutes, more than likely to those prices, about 30 points higher. So we're going to have to keep that in mind too when we're planning on putting our position on. Like if we were to buy, we're concerned about this call because the call has no value left in it. If you go back to your monitor tab, look at the value left in that call. It's marking at basically nothing, right? What did you do? What did you do to all your equities?
Huh? I just closed.
Okay, gotcha. You see the mark on your call. What's it at?
0.6.
Yeah. So it's got no value in it, right?
Mm-hmm.
So we want to move that down because it's not doing anything for us if the market falls. So we have 1 minute till the market opens. We're going to go ahead and go to the bid, go to the ask, and then hold down control and also go to lower strike that we want to sell here when the market opens. And it looks like the market is open, and holy crap, we're not doing anything right now. The market just rallied like crazy. Maybe we don't want to touch this right this second. We might just see a bounce right into that range. Hang on, what's your P&L for that position doing right now? Are you making money? You're up 390 in there right now, is that right? Yeah, 400. I don't know if we want to touch this right now, to be honest with you. Yeah, we do. Even if this thing rallies back, we're still going to adjust it down a little bit here. All right. So you're still in the trade tab. Go back to the trade tab. Buy. Oh, what did I get filled in? Oh, I got filled in one of my contracts. Go back and now, yeah, hold down your control. Click on the ask for the contract, the call contract. That. Yeah. Click on that ask.
This one?
No. Yeah. Click on that. Yep. And then go down to. Let's see here. We're at 625, so go down to.
What's this?
I want these markets to get tighter. Go to 2550. No. We're gonna sell 2550. We're buying that. Now go back to the options chain, and hold down Control and click the bid on the 2550 call. There, we're rolling this down to try to get more credit. But that's really not giving us much of anything. How much of a credit is that giving you?
230.
Unlock it. See that little lock to the right of it? There you go. $5. Much better. What's it marking? It's trading at 440. Yeah, go ahead and do that. How much is it going to cost? Buying power should be like next to nothing.
$4.50.
Yeah, that $4.50 is just the cost of your commissions and stuff.
Yeah.
Okay, go ahead and put that. How much is it going to collect you? What's your credit? $250. Okay, go ahead and send it. See if we get filled in that. Not filled. Why not? Not filled. Because those markets are terrible, honestly. 13, 17. I think you just leave that throughout the night, honestly, and see if you get filled in it. Because this is quite the rally we're seeing. If you look at the Russell, it's up 1.5% almost. You can see it.
Right there.
Yeah, but you should be able to see it on your watch list. Didn't you make a watch list for yourself? That's not the same one that... No, in the middle. You didn't make that watch list. You're not even looking at the right watch list, are you?
No.
Huh?
That's a watch list.
Yeah, but it's not yours. Go to personal. Did you not save it? Did you? What? It was a challenge. Yeah, that one. Is that it? No. No, that's.
We didn't make a watch list for this account.
Did we not? Then just use mine. Go to the futures. Well, the one that says futures. There you go.
Which one?
What's that? No, I'm just saying now you can see the prices and how much they're moving after hours. Like the Russell, you can see all that. I think that's basically it. So why did we do that? Why did we put that order in?
Because the market's moving a lot. I don't expect any break up.
Well, go back to your position. What's the put side valued at right now? What's it marking at?
840.
No, that's your trade price.
17.6.
Okay, yeah. And then what's your put side valued at right now? Or your call side?
Like 7.
No, that one is just showing the one that you're trying to get into. You're not into it yet. See, it says 0 next to the quantity.
So 6? Oh, 1.5.
1.15. Meaning you only have $50 you only have $50 left to make if the market goes down out of that side that you've sold. You don't want to have protection to one side that is so monetarily insignificant that you're basically defeating the purpose of this strategy. This strategy is to collect premium on both sides of the market. And if you get a down move, the call is supposed to offset the down move. But now your call has no value left in it to offset the down move. So you need to move it closer to the money to collect more premium so then you can have more of a monetary cushion to the downside.
Okay, so we're just giving ourselves another
$250 in credit and potential protection to the downside.
Okay.
So go ahead and Go ahead and try and get that one filled. Go ahead and hit cancel replace. And then unlock it again. See what it marks at unlocked.
440.
Okay, take it down to 440.
Why is the chain
There you go. Go ahead and hit, because it's chain. It's a market's moving. Go ahead, send it. Still not filled. Take it down a little bit more. Take it down to 420. There you go. Confirm it's sent. Seriously, take it to 4. It's getting a little ridiculous. There you go. All right, don't go lower than that. I'm not sure why you're not getting filled, but I wouldn't take it too much lower than that. I wonder if we'll get better fills if we move to a strike that's go cancel that whole order. See if we can get better fills, taking it a little bit closer to the money. So go ahead and hit the same bid to buy that, or the same ask to buy that one back. Hold control, hit that ask, and then take it down to the 2,500, and then hit the control on the bid. There, control bid. What is that? That's marking at. Go ahead and send that and see what happens. It says fixed field. The field that you entered it was incorrect. Go back to trade. Do it again. What's it marking at?
1440.
1440. Go ahead and send it. No, it's not at 1440.
1465.
65. Change it to an even number. There. Yeah. Still not filled. Okay, go ahead and see what it's marking out now. Take it down to 1430. Send that. I'm not sure why you're not getting filled. These markets are just really wide. We should have maybe used a different expiration because this is ridiculous. 1430, and it's marking 12 and 18 were. You know what? Honestly, change it to 15 and just let it sit there all night. Yep. Just put it in and then let it sit all night, because we're not going to play this game of giving up like $50 to get filled in it. We'll just see if the market comes up to us. So now effectively what you'll have is be back into somewhat of the similar equal strategy. You're definitely closer to the money on the call side, but with this down move, that might end up being a good thing. So hopefully you can get filled pretty much and have if you get filled at 15, that's going to give you how much more of a credit?
Compared to what? 1440?
If you get filled, no, what is that? If you get a $15 credit, what does that translate with this option in this contract in dollar amount? 15 points in the Russell is how much money?
150?
No, 15 points. They're $50 a piece, remember?
Oh, yeah. 15 times 250, so 750.
Yes. So that'll give you 750, and the value of your current put is almost 20 right now. So that's about 1,000. So then you'll have a relatively neutral position again as far as your delta and protection on each side to help you get paid if the market goes up or down, at least within a range. I feel like this was a bad job of explaining what we were doing. But also look at some of your stocks. Did you look at your stocks?
Huh?
Did you look at the prices on your stocks?
Results?
Yeah, like AMD. Did you see where the price of that thing went to? It got wrecked. It's marking at 215 right now. It was up to 235 or so. So it
How do you
dropped.
check that?
The mark, you just open it up. You have to
Where's
expand
mine,
it. You have to expand AMD, the little arrow to the left of AMD.
Oh.
There you go.
Oh, okay.
The price of the stock, 215. It got destroyed. There was another one that had a big move. Snap went down a decent amount. Reddit went down a lot as well. Palladium's the only one that really didn't go down. Weeble went down a lot. Yeah, pretty much across the board, everything went down. So that's another good way to gauge if you've been trading a stock and monitoring the price of it over a longer period of time, and you notice that the market goes down and the stock that you are familiar with the price, you notice that this is an abnormal move in that stock and you're looking at the market as a whole and it's going down. That also helps you get some context about, like, hey, is this serious or not, basically? Is this a big move? Should I be concerned? When you look across your portfolio and you're familiar with, 10 different stocks that you've been trading for months and months, just by looking at your P&L and what the price of the stocks that you're familiar with, you can kind of get a gauge about the overall market as well, to know, hey, something's wrong here. We're going through some turbulence. All right. So tomorrow's Monday. So tomorrow we will actually, depending on what the market is doing, or depending on whether or not you get filled in that over the night tonight, we will definitely, if you don't get filled, we will adjust that to get you filled. And then we will also start looking at, depending on what the market's doing, opportunities or ways to adjust risk. So maybe some new opportunities because of this increase in volatility, but you can already see the VIX futures. They're down $2 tonight so far. So that means the fear is coming back out of the market. So we might just see this thing rally tonight, which would really make Josh sad because he was hoping to see the market get killed. So we will see. All right. Thanks for popping in here. Hopefully that was helpful. This one's going to need a ton of editing because that was rough.
Can't you see the candles rise and fall? Risk and reward, it's a game of all or no. Options open, futures closed, eyes blind. Frustrated fathers dreaming the stock grind. Explaining specs, faces blank as empty streets. Hedging positions, but the questions repeat. Time decay means nothing to the young souls in this marketplace. It's like digging holes. Iron condor flies, but it never lands. They can't grasp the feel of these trade winds. Liquidity try choking on the sand. Profits and losses, they'd rather go play bands.